Here's a full guide on the UAE's 9% corporate tax. As we all know, the UAE implemented a new corporate tax rate of 9%, which came into effect in January of 2024. For each financial year, every business in the UAE is now liable to pay a 9% corporate income tax rate on any of their business profits that exceed 375,000 AED or equivalent to 102,000 US dollars. So the first 102,000 US dollars of business profits is completely tax-free. Anything after that would be taxed at 9%. For example, if your business does 150,000 US dollars of business profits in one financial year, only 48,000 US dollars will be taxed at 9%. And the first 102,000 US dollars is completely tax-free, taxed at 0%. Now, there's 3 key action steps that we'll quickly go over for every business here in the UAE regarding this corporate tax. Number 1 is to register your company for corporate tax. This can be done with our assistance. This can be done on your own, but you have to register your company for corporate tax. Number 2 is to meet the legal requirements for bookkeeping, invoicing, and everything you need for tracking your revenue, your expenses, everything that goes in the business, everything that goes out the business. And number 3 is to file a corporate tax submission with the FTA after your first taxable year. As per the law states, you have 9 months before your first taxable period to make this first filing, which in this case would be September 30th of 2025. The next thing to note would be corporate taxes for free zone companies. Of course, as you might have heard, there are free zone companies that have qualifying activities which will be exempt. I'll put the list for that up on the screen right here. These are the qualifying activities in which if your business is doing these activities, you are exempt from paying the corporate tax. Your company will be taxed at 0%. But if your company is not doing these activities, if you have a non-qualifying activity, your free zone company will be taxed at 9%, of course, on your corporate profits that exceed 102,000 US dollars, equivalent to, of course, 375,000 AED. The next thing to note about this corporate tax and the program that the federal authorities are offering here in the UAE is the small business tax relief. For the first 3 years of this corporate tax, of 2024, 2025, and 2026, the UAE is offering a tax relief, a small business tax relief for companies that do less than 3 million AED in company revenue. So this isn't profits, it's revenue. If your company is doing less than 3 million AED in revenue, which is around 817,000 US dollars, then you can be exempt from paying the corporate tax for each individual year. And that's 3 million AED for each individual tax year. If your company is doing 2.9 million AED in 2024, then for 2024, you can apply for the small business tax relief and be exempt from paying the corporate tax rate. And it doesn't matter what your profit is. Your profit could be 2.8 million dirhams on 2.9 million of revenue. You will be exempt from paying the corporate tax rate for 2024. Same goes for 2025 and 2026. So for each individual tax period, you have the opportunity to take advantage of this small business tax relief and be exempt from paying the 9% corporate income tax rate. The final thing to note is which expenses can be used to reduce your taxable income. Number 1 is salaries paid to owners. Of course, this has to be a reasonable salary. I've heard many people say, can't I just pay myself out my entire profits and then my personal income would be taxed at 0% and I have to pay no taxes? It doesn't work like that. It's the arm's length principle. You have to pay yourself as an owner a salary of what someone in your company who isn't an owner of the company, but in the same position as you, what you would pay them. So the salary does have to be reasonable, but salaries paid to yourself or salaries paid to any employees in your company can reduce your taxable income. And of course, as I mentioned, personal income in the UAE is taxed at 0%. So anything you pay yourself is non-taxable, but it does have to be reasonable. The next thing would be interest costs. Any interest that your business has, any interest that accumulates in your business can reduce your taxable income. But the interest expense that can be deducted is capped at 30%. And finally, we have entertainment expenses. 50% of entertainment expenses can be deducted from your taxable income. And the final thing to note overall is that any dividends from your company are not taxable, and selling any shares of your company or selling your shares is also not taxable, which is very important for many people. They come here, they grow their business, they want to sell their company, they don't want to tax on that, and it's non-taxable. If this video was helpful at all, make sure you subscribe to our channel. And if you're looking to establish your company here in Dubai, if you're looking to obtain a residency visa, or if you need help with any accounting services regarding this new tax or anything related, be sure to book a call with the link in our description, and our team at GenZone will be happy to assist you.